All right, more on the big Fed rate decision. Let's check back in with Jen Schonberger to get her key takeaways from the Powell speech. Jen, what stood out to you?
Hey, good afternoon there, Dave. Fed Chair Powell walking a very hawkish line at the press conference, saying he couldn't confidently say that Fed officials wouldn't raise their estimates for rate hikes at the next meeting. Remember, the Fed officials just raised their estimates for rate hikes up to 5.1% for next year, and that's just the median estimate. 7 officials see rates moving higher than that. 5 officials seeing rates move up to 5.25%, and 2 seeing up to 5.6% next year. He says, of course, that the SEP does not represent a plan, and nobody knows with certainty. He says the focus now is on moving policy stance to one that is restrictive, and they are not whatsoever considering rate cuts. He says he wouldn't consider rate cuts unless he is confident inflation is coming back down. Now, as for the growth forecast, Powell was asked whether their growth forecast of just 0.5% of growth next year basically constitutes a recession. Powell turned that down flat, saying it's still positive growth, and it's really tough to know whether what the odds of a recession are. I asked the Fed chair whether committee members discuss how deep of a recession they'd be willing to take in the midst of these rate hikes. Take a listen to what he said.
What we do is we make our forecasts and we publish them quarterly. And if you look at those forecasts, those are forecasts for slow growth, for a softening labor market, by which I mean unemployment goes up, but not a great deal. And you see inflation coming down. You see rates going up a lot. You see inflation coming down. Those are those forecasts, and that's really what they show. We're not. We all, of course. We don't talk about this kind of a recession and that kind of a recession. We make those forecasts. The staff runs, and you will see this if you look at the old Teal books, runs alternative simulations of all different kinds at every meeting, and we look at those too. And those will explore different things. But that's just upside and downside scenarios. Of course, that's responsible practice that we've carried on for many decades.
As for the next meeting and whether the Fed could slow down the pace of rate hikes even further to perhaps 25 basis points, Powell basically saying he hasn't made a judgment for that meeting. Everything is going to be made on a meeting-by-meeting basis and will hinge on incoming data. He says a big part of this will be looking at wages moving back towards lower levels. Back to you.
And Jen, how important do you think the labor market is in all this? Because clearly it was a theme throughout the press conference. Powell, time and again, reiterating how tight the labor market continues to be, and the layoffs that we more recently have seen, specifically within the tech sector, that's more of an industry-specific problem rather than signaling really what's going on overall in the labor market.
Yeah, Shauna, to your point, Powell saying that the labor market's still very much out of balance, and it's going to take time for that to correct. And when that does, wage pressures will correct. But until that time, he does see wages remaining elevated and tying into this inflation scenario that we're seeing. He expects inflation to still remain elevated going into next year, but they do expect substantial progress as we go through the year. He welcomed the news on the CPI reports in both October and November, but says that that's just 2 months and there's still substantial progress that needs to be made.
All right, excellent work once again. Jen Schonberger, thanks so much.